everybody, it's Pete Carmasino here at Chaikin Analytics. This is the halftime show on StockCharts TV. Thanks for joining me each and every week. We kind of go over just some things that are happening here in the markets. Last week, we talked about some names that had an increase in short positions. And if you go back and watch the video, on that list was First Republic. Now, I don't think I called it out. I overlooked it. I was looking at a lot of symbols and I was running out of time. But if you go back, FRC was rated neutral. And over that weekend, it had updated the short interest to being more bearish. And obviously, we know what happened there. So that's the big news this weekend. FRC, First Republic Bank, going into receivership. It looks as if it's, again, not trading. It's going to be halted. I don't know how long that's going to be. I don't think anybody does. Maybe it's going to be shorter than Silicon Valley Bank was and Signature Bank. I know that process took weeks. It looks like this one might not take as long, but the failure of a bank is always an issue as far as working things out. I guess potentially moving the shares where they're listed and where they're traded. It could take several days, if not weeks. I don't know. Again, I guess I haven't seen the latest news. If that's out, I apologize. I haven't been able to see it. I've been preparing for the video. Just a lot going on here in the market. So, you're seeing big moves, obviously, from JPMorgan, who is picking up First Republic. You're seeing moves from General Motors. I think I had an upgrade. You're seeing moves from Exxon on a downgrade, and just a few other names in between. So we'll look at a couple of those names. I'll try to run through those charts real quick. We're going to look at the rally setup where rally number 6 on the weekly basis has now continued. And it was looking like it was fading there a little bit, but it looks like it has turned north again. And that's actually good. So now the next target is really 41.95. People will be using 4,200, but it's got to really close above 41.95. It doesn't matter if it goes to 4,200 or 4,210. As long as it's above 41.95, I think we're going to see, continuation up to the 4,250 to even 4,300 level. But again, we don't know. We're just going to follow the trend week to week. We'll look at that trend. We'll look at the bullish percent of those indexes. We look at New York Composite. We look at the S&P. We'll look at the Nasdaq as well. And then we're going to look at some names that have turned bullish. Now I'm going to look at really large cap names that have turned bullish this week on the Chaikin list, like we always do. And then there's one other name out there that's people are calling under the radar. Guggenheim has upgraded it and said it could rally almost 60%. So we'll take a look at that and see what that stock's doing as well. So let's dive into the charts right away and see what we can see. All right, folks, we're back at that weekly chart I look at every week. You can see the number of rallies I've been counting off here. And really, after they bottom and start to move, we're looking for at least a 5% move higher. We've got that here on rally number 6. It looks like it was going to stall. That held on that support, that 55 weekly moving average, 55-day weekly, but it's an exponential moving average, not a simple moving average. And each and every week, if you're new, we look at the New York Composite, the Nasdaq Composite, and the S&P in those 3 panels below. And you can see that the bullish percent was negative last week. And we definitely had a volatile week with all the news coming from First Republic and, just some other names back and forth trading, with earnings, with beats on some tech names and some misses on others, and just a very volatile overall environment, which is not new, right? We've been through this. I think we're getting trained on volatility on a monthly basis, but you start to see this trend, and I'm looking for this high to be broken, which would be the high. I got to squeeze this down a little bit. The high of rally 5, which is around 41.95. You can see that at the upper part of the blue screen right there. I move my arrow back to that day. 41.95 is high, so I want to see that. Obviously, the next high would be around 43.25. All right, which would be incredibly impressive if we can get there. But the first hurdle is the first hurdle. So we got to get through that. We got to close above it handily and then move, to the next level. So to me, this is looking pretty interesting. Let's just look at the Nasdaq real quick. And when you move your ACP charts around, it asks you to save it, which is a blessing sometimes because I forget that I change things. And if I don't save it, I wonder where did it go if I didn't save it? It's always a user error, that's for sure. All right, so on the Nasdaq, you're looking at multiple moving averages, support lines and kind of things that are just kind of happening here. This is a line chart. I can change it to a candlestick. When I'm on a weekly, I'd prefer to look at the line chart, but the candlestick will show you where how low the bar was trading. But you're seeing that 200 simple average on a weekly basis, simple moving average on a weekly basis, being supported on the Nasdaq and really pushing higher, and it was actually resistance on the ratio. Interesting how that works out. But I like the look here. Obviously, it's looking good. Let's look at oil. I haven't looked at this in a couple of days. Back below 80 and really running into its resistance area of the 200-day moving average here on oil, on WTIC crude anyway. Or yeah, WTIC. What did I say? So 84 was around the 84, 83 and a half, 84 was around that resistance level. It pulled back. And I have a different chart here. I want to show this one. Actually, I thought it was kind of interesting and witty to a degree. But the White House buy zone and seems to be the area of support. And that's where they said they were going to start refilling the Strategic Petroleum Reserve around $70 to $72. I even gave it a little leeway to 67, a little standard deviation. It never closed below there, moved higher and getting a little volatile. As we know, that's what's happening. From the sector standpoint, obviously we want to look at some tech names. So we'll start with communications, which has been sort of a slow grind higher. The moving averages had crossed. It kind of sold off after the fact. But you look at the ratio to the SPY, that's really confirming an upside move. And you have to respect it. You cannot deny that it is there. We might see earnings, pull back. A lot of folks are coming out and saying, we're going to see a downturn in earnings. I think we already knew that. I think the market is talking about that already in a way that it's reflected. All right. It was reflected back here that the second half profits might be a little bit disappointing, I guess, for lack of a better word. But again, we have to wait for the trends to materialize and how things play out. You can see there's resistance on XLC at around 60. You can get above that level. We start to look at higher levels, 67 to 70 are on the tape, right? That's really going to be on the chart. Financials we know are having trouble. FRC, just the latest trouble in that group. And that's just been not participating in the upside. And of course, I know we all love technology, so we're going to go back and look at XLK here as well. A very similar chart, but it's really broken out. And now resistance is right around this previous high, around 150. It's above that right now, but it's kind of meandering around there. It's hanging on to it. I know it's trading at 151, but I'm looking for, a decidedly higher move, right? Even here when it broke higher and got above 151 and change, it rolled over. Let's see that be surpassed and get a close above that handily, right? And I want to be in the 1 point range. I want to be 5-10 points above it on a close, and then start to say, the next area of resistance is going to be around that 162, and then even higher, all-time highs of 170. So we're not far off, right? We can still see that. Some defensives, XLU, right? Sort of meandering along. It's really not giving up yet, except the moving averages have not confirmed on the asset itself, on the XLU, the sector itself. On the ratio, hasn't either. So look there. Let's look at XLV. That's a different story. Now, XLV's got a nice looking trend here from the lows of March, moved higher, and the moving average has recrossed on the upside. But the ratio is really fighting and staying sideways, right? It's just not really getting a good look compared to the S&P. What does that really mean? It just means that the S&P is outperforming the XLV. XLV is not a bad sector. It's just not the best sector. And then obviously we look at discretionary, which is another tech sector, heavy kind of, you see Amazon, you're going to see Tesla in there as well. Tesla's really dragging this one down. It's having trouble getting out of its own way. There's not a confirmation there yet. And I did miss XLP. That's the real defensive one I wanted to look at just before we jump over to the other charts. And that's actually been confirming on the upside. That's really, a needs and wants kind of thing. And when you start to see this name perform, you're not necessarily getting super defensive, but, there's action there, and the price action is not lying. And when you see staples move in conjunction with, markets moving, I'm not sure really if that's a negative or a positive. Obviously, it's a positive if you're long staples, but from the ratio perspective, the S&P, the SPY is still outperforming staples. So even though staples is moving higher, the S&P is just doing better. That's really how that ratio chart works. Okay, we said some of the big names that are moving today. JPMorgan is one of them, and it's been back and forth. It obviously had a great change of trend back here in October around 113, moved to a high of around 145 and change. Looks like it even traded there today, high of about 143 and change. Money flow has been obviously great. Earnings were excellent. The relative strength was back and forth, but this is the mover because of the FRC news. You go out and read about that. It's pretty unbelievable that we've had another bank come into this receivership of the FDIC. So we'll see how that plays out this week, but it's looking good for JP right now. GM was called out as a good stock here, one of the obviously U.S. automakers, but it's really having trouble fighting its trend. You can't really fight the tape on this one. Of course, I like to see the name turn bullish and be better, but we're neutral and we've got negative relative strength here that's really holding this back and really not giving it any room or any slack, for lack of a better word, to get it moving out of its own way. Now, Exxon is an interesting name. This is a name that had been back and forth between neutral and bullish. It's actually on the list of being turned bullish this week as well, but a name came in today, or a firm came in today and downgraded this name and just said that, the upside's limited. I can't disagree, obviously, but you look at the trend, the industry itself is weak, the trend is strong, but it's really fighting itself back and forth here. Money flow has been incredible. You obviously want to see a name like Exxon stabilize. It's moving pretty erratically, I would say, for lack of a better word. If you're looking at an ATR, it's around a 2 or 3 ATR, about 2.64. That's an average true range. It's moving, above its typical setup. But again, good earnings obviously came out, but the stock is moving back and forth. It's just a tough name. Now, we talked about FRC. I told you it was on the list last week. I'm gonna have to go back and look at that video last week. Look at the end of the video and take a look. But it's there. And if I look at experts here on FRC, we saw short interest was at its bearish peak. Now the stock's not trading. It's halted and likely going to be halted at least until this is all sorted out. So you got to be careful with that. Let's look at Norwegian. I think that's NCL, right? Yep, Norwegian Cruise Line Holdings. The stock was up about 8% or so, just about 7.87. And that's after better than expected quarterly results. So an interesting pop on a name that's been kind of bearish and relative strength really not helping out at all here on the negative side. So when you see that, you got to just be cognizant that that's happening, but try not to get caught up in this until this starts to really firm up. You want to see the ratings change, which it will. It typically will probably go to neutral, negative. And then if you want to see some upgrades here, maybe that'll happen along the way, but you just got to be careful before then. Lastly, just going through the list here that had turned bullish this week. So Autodesk is one of them. And I'll tell you what I did, folks, just so you know, we have a way to filter our settings, right? So I'm looking for stocks that are above $5. Volume is 250,000 shares or more on a 20-day average, and at least a $5 billion market cap. And this one, they have to be optionable as well, right? So when I look at those, you start to see a pretty good number of names here. I have to go back and refilter this. Okay. And now I've got the right number of names here, right? It's only a handful of names that meet that criteria. And they're names, there's Exxon, here's Meta, here's Medtronics, and a whole host of names that you want to pay attention to. Okay, folks, I fear I went a little over time here, so I apologize for that. Anyway, we'll be back next week here on the Halftime Show. I'm Pete Carmasino. We'll talk to you soon. Thanks.